Welcome back. As promised, Vinay Paharia, who's the Chief Investment Officer at PGIM India Mutual Fund, joins in now to discuss the market fundamentals, his top sectoral picks. Vinay, thanks for joining us. Appreciate your time here. I wanted your thoughts first on what's happening in the tech sector, right? Tech Mahindra is the top gainer today, up 8%. A lot of the companies are indicating to us that there is a slow pickup in discretionary demand right now. So certain pockets are looking good. And the management of Tech Mahindra is quite confident as well over the next 2 to 3 years to outperform their peers. Your thoughts and what would be the best way to look at the sector now?
Hi, good morning, Sonia. Thanks for having me on the show. So on the tech sector, while I won't talk about specific companies, but what we are seeing is clearly there is a slowdown in the sector, especially on the discretionary spending side. There was an expectation of gradual improvement. That's still not coming. There is still an expectation that in FY25, we will start seeing some bit of improvement. And I think that is the current consensus amongst the market participants. Having said that, the valuations have clearly derated somewhat in the last 1 year. Remember, tech sector was the darling of the market post-COVID, and hence has seen some bit of valuation moderation. But still, we are not out of the woods as yet as far as the sector woes are concerned. And hence, broadly, there are certain challenges still in the sector.
Vinay, good morning. Thanks a lot for joining in. I was going through one of your portfolio allocations, and there is a significant allocation towards private sector banks, large private sector banks to be specific. Now, with the latest regulatory hassle that one of the large lender is facing, India's largest private lender is already going through issues of its own. There have been questions on the street for months now as to whether that has bottomed out or not. How do you see this private financials theme playing out in the next 12 to 18 months, Vinay? Because is there value there now? Do you expect that to do well, or mid-cap financials or even PSU banks offer a better opportunity?
Sure. So I think you're right. There has been a lot of shocks in private sector banks. It was not expected to have these kind of challenges. And the sector has clearly got derated substantially over the last 2 to 3 years. Having said that, we need to realize that this is a sector, especially on the private sector banking side, which is clearly linearly related to India's GDP growth. This is a sector which has done much better compared to many of the other financials. And if you look at their returns on equity, if you look at their quality of lending, all of that. So clearly, valuations 3 years back could have been a challenge, which clearly have now got derated. This is a sector which represents a lot of opportunity if you believe India's growth story is intact.
The other space that you like, right? I mean, going through your large cap fund, the PGIM India large cap fund, there are a couple of spaces which have done very well. So aerospace and defense, for example, BEL has a space in your fund. Then you have a couple of other, there's Telecom, Bharti Airtel is sitting at a fresh 52-week high as we speak. The power companies, NTPC, you have some of these retailers like Zomato, which have zoomed quite a bit. What do you do when these names, hit new highs? Do you continue to ride this move, or are you looking to churn out of any of these spaces?
The way we approach most of our investments is to look at what is the potential risk reward underlying these companies. If the underlying companies' businesses are doing well, it's but obvious that the stock prices will do well. So if we are seeing significant re-rating, stroke de-rating, those are the times when you need to do some action on the portfolio. Otherwise, you don't need to do much. If the businesses are doing well, it's better that you leave them untouched. It's important that we remain invested for a longer period of time, and our investment horizons are clearly very long term.
Right. Vinay, I wanted to get your views on auto as well. You have a substantial allocation towards auto, more importantly towards auto ancillaries more than auto. I see a couple of auto component names there. I see a tire company there as well. Is there how is the auto sector likely to fare going forward, considering we have numbers coming up as well? We had numbers from Bajaj, Maruti reports results today. And within that camp of choosing between two-wheelers, four-wheelers and tractor manufacturers and auto ancillaries, of course, where do you stand?
I think auto ancillaries present multiple engines of growth. As you rightly said, if you want to buy or original equipment manufacturers, you have to choose necessarily between tractor manufacturers or a two-wheeler or a four-wheeler. Whereas when you invest in bottom-up pick auto ancillaries, you have a lot of optionalities. Like, for example, many companies are huge beneficiaries of either PLI, they are huge beneficiaries of China Plus One, or companies which have developed significant competitive advantages as far as their exports are concerned. So there are multiple drivers of business growth in many of these companies. And hence, I think on a bottom-up basis, many of these companies, especially on the auto ancillaries, look very attractive. And hence, we have invested in many of them.
Okay, got it. What about the whole travel and tourism space, right? You have Interglobe Aviation in your list in transport and services, but these stocks have run up a fair bit. Do you still like them? Any hotel stocks that you've been, betting on, and perhaps you want to put some more money to work there?
Especially on the travel and tourism side, what we have seen is clearly there has been a huge revenge travel, so to say, in the last 2 to 3 years, and clearly people are spending more. They are ready to take up hotel rooms at much higher rates. They are ready to buy airline tickets at much higher rates, and clearly there is a huge pricing power which has come back to this sector. In addition, there has been a lot of consolidation which has happened in this sector, which brings in long-term structural improvements in the business profile. So I think not just the near-term or the cyclical upturn, but also structural improvements are visible in individual companies in the travel and tourism space. And hence, while being very stock-specific, the sector looks reasonably attractive from a medium to long-term perspective.
Vinay Paharia, thank you for sparing time and joining in with your views on the various sectors that you prefer. That was Vinay Paharia of PGIM India Mutual Fund. But time for a short break. But before that, here's a programming note for our viewers. Our Friday special offering, Editors Roundtable, is now coming at a new time. Starting today, catch the biggest market headlines of the week with expert analysis from our market veterans and our editors every Friday, now at 3:30 p.m.